for inviting me here as a speaker, and special thanks to the organizing committee constituting of BK Agarwal sir, Pramod Mundra sir, Jay, everyone who have been very kind enough to have me here on this session, which is probably one of the most interesting and most important topics when it comes to today's relevance under GST, because this topic has been one of those topics which has probably shaken the nation for the last 20 days, because there have been so many changes in GST. Perhaps one of the largest changes that we have seen in the recent times, when we've had a flurry of notifications, circulars, central tax rate, central tax, both coming in. And I'm sure most of us here are already into the practice of indirect taxes. They have some background. So we'll try and take up all those aspects which have some, which are the changes which are relevant here, so that we are able to understand what was the position of the law before the change, what is the position of the law which is there after the change, right? And I'm sure we have Jay also, so I would request Jay to also support me, who is also a prolific speaker and a knowledgeable person on GST in Calcutta. So if there are anything, if there are any views, please do let me know in between also. I'll try to take them up. So with this, let me start with my presentation. Is my presentation visible?
Yes, it's visible and audible.
Okay. So the first aspect that we would be talking about would be the withdrawal of exemption on non-branded food items. I'm sure everyone has heard about this news, or I'm sure they must have had some experience with it when it comes to some clients asking us these questions. Even if let's say you haven't dealt with these clients, but I'm sure you must have heard in the news that there have been a lot of products on which GST have now been levied, which was not there earlier. So it seems that a lot of essential products which were not in the net of GST earlier has now been covered. Let us look at the position of the law which was earlier and the position which has become now after this change, right? Now, earlier also there were two rates of taxes when it comes to food items. First was 5%, the other was exempt. Now, the taxability on these food items used to depend on whether or not they were branded or non-branded. If they were branded, they were under a tax rate of 5%. If they were non-branded, the tax rate was exempt. Now, in case of branded items, it was stated that there can be two situations. Number one, there is a registered brand name on which tax had to be levied. Second, the brand name was not registered, but still there was a right for enforcing any action against the recipient. So enforcing any action under the intellectual property rights. What does it mean? Basically, normally if I'm having any brand name with me, even though it is not registered with the Registrar of Trademarks, still if anyone, let's say, violates the provisions of that brand, let's say someone wants to copy that brand, I still have the right to enforce action against that person, right? So if anyone tries to copy that brand, in that case, I have an option to enforce action against that person. Now, if anyone forgoes that brand, then only the product was considered as non-branded. So either if the product was registered, having a registered brand name, or if the brand name was there, but the brand name was unregistered, but there was a right which could be enforced against it, in that case, it's constituted in that case, it constituted a supply of goods wherein the tax rate was 5% in most of the cases. Now, in a lot of cases, what people did was they voluntarily had foregone their rights on the brand. So they submitted an affidavit before the department that whatever brand name I'm having, I'm foregoing my right against it. And they have also written it on their packaging. So that's why they were under the exempt category, right? Now, a lot of questions used to arise whether the name of the manufacturer can be considered as brand name. So let's say simply because I'm writing the name of the manufacturer, which is a big name, for example, Aditya Birla, whether it is construed as a brand name or sale from an exclusive retail outlet. For example, there was this case of More. You must have heard these More outlets, More retail outlets, MORE. Now, if these retail outlets were selling without from an exclusive brand, like they were selling from an exclusive brand of More, they have an exclusive retail outlet, whether that would be considered as branded or not, whether what is the difference between branded and unbranded, or unbranded items versus unregistered brand names. So a lot of these disputes used to arise. Now, in a lot of cases, people were not paying taxes because they were stating that these brand names had been surrendered by me, or I don't have a registered brand name, so I would not be levying any taxes. Even a lot of packaged items having rights which had been surrendered were selling items without GST. This was the position of the law before the change. Now, what the government did was they realized that there are a lot of items which are coming out of the tax net because of tax planning by simply not putting them under branded products. That is how it was as per the provisions of the law. So what essentially the government did was they said from now onwards, all types of pre-packaged and labeled pack in terms of Legal Metrology Act would be outside the scope of taxability. So it would be outside the scope of exemption. So all pre-packaged and labeled items would now be considered within the ambit of GST, for which 5% levy of GST would be there. Now, pre-packaged and labeled as per Legal Metrology Act is something that we need to understand very carefully. The meaning of what is pre-packaged and labeled. Now, Legal Metrology Act is basically the act through which all the goods are required to have the relevant declarations of MRP. So any product which is having the declaration of MRP, quantity, all those things, that is required as per the Legal Metrology Act. And whether any packaged with any product which is sold with what declarations it should contain is defined through this Legal Metrology Act. So it contains the definition of both pre-packaged and labeled. So let's understand the meaning of this. What is stated under the law? The expression pre-packaged and labeled means a pre-packaged commodity as defined in 2L of Legal Metrology Act, where the package in which the commodity is pre-packed or a label affixed thereto is required to bear the declarations under the provisions of the Legal Metrology Act. So basically, if any item is pre-packed or there is a label affixed thereto, this is the first condition. Second, it is required to bear the declarations under the Legal Metrology Act. So it should be satisfying two conditions. Number one, it should be pre-packed or labeled. Number two, it should have the required declarations, or it is at least required to have all the declarations as per the Legal Metrology Act, right? So if anything is covered within pre-packaged but is not required to have the declarations, it is outside the ambit of GST, right? Or it would be considered as an exempt product. I have just given a sample entry here, wherein earlier the entry was all goods put up in unit container and bearing a registered brand name or a brand name on which enforceable right is available. Now it has been very simply removed and it has been stated all goods which are put up are pre-packaged and are labeled, right? So Legal Metrology Act, pre-packaged commodity means a commodity without which the purchaser being present is placed in a package of whatever nature. So first of all, what is important? What is the meaning of pre-packaged? Pre-packaged means any packaging which is done without the purchaser being present. So there is no packaging being done in front of the purchaser. So it is not like if any atta or chawal is, let's say, put up in a polythene bag, or let us say it is put up in a sealed packet or any pouch, and it is being done in front of the purchaser, it will not be considered as pre-packaged commodity. It is still a loose commodity. Anything which is packaged before the purchaser being without the purchaser being present. So it was already packed when the purchaser had come to buy those products, is placed in a package of whatever nature. So it should be in a package of whatever nature. It can be any kind of package, does not matter, whether sealed or not. So package may be sealed or it may not be sealed. That also does not matter. So that the product contained therein has a predetermined quantity. So there should be a specific quantity, a predetermined quantity, which should be available in that package. The quantity should be clearly defined, right? It may be 1 kg, 5 kg, 7 kg, 10 kg, does not matter. But the packaging should be in such a way that it should contain the requisite quantity or amount which is already determined as to what it should contain. So it's a predetermined quantity. So simply a polythene bag wherein I'm packing any rice or atta, it will not be considered as predetermined quantity if it is not determined beforehand, right? So it should be determined before the purchaser being present. It should be pre-packed. It should contain all the relevant declarations as per law, right? Now, it has been stated that legal metrology, packaged commodity rules 2011 states very clearly as per rule 3 that the provisions of this chapter will not apply to packages of commodities containing quantity of more than 25 kg or liter. So basically it should not have quantity of more than 25 kg or liter. If it is indeed having quantity of more than 25 kg or liter, in that case it is not considered as a product which is required to have declarations under the Legal Metrology Act. So the Legal Metrology Act is not required to have the declarations. In that case, it will not be considered as taxable under GST. So any commodity having quantity of more than 25 kg, or in case of liquid waste product 25 liters, if this condition is not fulfilled, in that case, if this is less than 25 kg, in that case tax would be leviable. If it is more than 25 kg or liters, in that case tax will not be leviable, right? It will be considered as exempt. Cement, fertilizer, and agricultural farm produce sold in bags above 50 kg. So any agricultural farm produce which is sold in above 50 kg bag also is not required to have the declarations under the legal metrology provisions. Next, very important, packaged commodities meant for industrial consumers or institutional consumers. So any goods which are being consumed, let's say any wheat or atta being supplied to, let's say, a biscuit manufacturing company. In that case, these companies are industrial consumers who will use it for further manufacture. In that case, for them, the declarations are not required, or the relevant declarations are not required under legal metrology rules. That's why the entry of pre-packaged and labeled would not be applicable for these consumers. Or institutional consumers, maybe airline or hotel. I'm giving, let's say, pre-packed food to airline, or I'm giving pre-packed food in a hotel. In all these cases, these are institutional consumers. Packaged commodities will not include these persons. So for them, the tax rate is not driven by this entry. So it is not driven by the taxability provided in this entry, which is for pre-packaged and labeled products only. So industrial and institutional consumers would not be covered within this ambit. Next, this rule will not shall apply to any package. This rules will not apply if the net quantity or measure of the commodity is less than 10 grams or 10 milliliters or less. So if any product is less than 10 gram or 10 milliliter, in that case also this provisions would not be applicable. Next, any package containing fast food items packed by restaurant or hotel and like. So if any fast food items are packed in by restaurants or hotel, even that would not be covered here, right? Now, what are the usual declarations which are required as per the packaged commodity rules on every package? Name and address of manufacturer, packer, or importer. Country of origin, from where the goods have been originated. Generic name, rice, wheat, atta. What is the generic name of the product? It may be sold by any special name, but what is the usual name of the product? Net quantity, what is the quantity being sold? 250 grams, 500 grams, 1 kg, or whatever it is. Month and year of manufacture. In which month and year it was manufactured. the last date, best before date, by what date it needs to be consumed, otherwise it may go rotten. Retail sale price, so MRP basically of the product, whatever is the maximum retail price of the product, that needs to be displayed, and the size wherever it is relevant. All these are required to be declared on the package. So these are required to be declared in the package as per the legal metrology rules. In that case, it is pre-packaged and labeled, for which GST would be applicable. If they are not required, if these declarations are not required under the provisions, in that case, it would be considered as taxable, right? If this declaration are not required, then it will be considered as exempt, right? So we need to be very careful about this. Let's move ahead. Now, let's talk about wholesale package. A lot of wholesale packages also require declaration under the legal metrology provisions. Let's look at this. Wholesale package, what does it mean? Wholesale packages basically means package containing a number of retail packages where such first mentioned package is intended for sale, distributor, or delivery to an intermediary and is not meant for direct sale to a single consumer. So basically, if there are a number of retail packages within it, right? If there is a cartoon wherein there are a number of retail packages within it and it is sold to a person who will further sell it, it is sold to a distributor who will sell it in the market. So if it is going to be sold in the market eventually to the consumer, so all these retail packages will contain the prices, individual MRP. In that case, it will be considered as taxable. Whereas if it is for consumption of the industry, whatever retail packages I'm giving, it is for the consumption of the industry or institutional consumers. In that case, it will not be considered as taxable. Next, a commodity sold to an intermediary in bulk to enable such intermediary to sell, distribute, or deliver such commodity to the consumer in smaller quantities. So let us say I am selling to an intermediary. I am selling to a person who will thereafter sell to the consumers. Now I am selling to that person in bulk. Let's say I have given him an atta which is already let's say having a brand name, and it is already pre-packaged, and it is, let's say, more than 30 kgs. In that case, since it is more than 30 kgs, it will not be taxable when it is sold to the intermediary, right? But as and when it is sold in smaller quantities of less than 25 kg, then it is required to have declarations under the legal metrology rules if it is pre-packaged. In that case, it would require taxability. So product may be bought as exempt and sold as taxable in this case. Next, 10 or more than 10 retail packages, provided that retail packages are labeled as required in the rules. So basically, if there are, let's say, 10 packages being sold together, and all these 10 packages which are sold together are required to have labeling required under the legal metrology rules, and they are sold as one package together. In that case, all these retail packages would be taxable. So if there are 10 kg packages of, let's say, 10 quantity each, in that case, all these packages would be taxable under the GST law. But let's say I am selling 50 kg one single shot. I'm selling 150 kg of quantity in one single shot to the intermediary who will thereafter sell it. In that case, it is exempt. Thereafter, when the intermediary sells it in the market for lower quantity, 5 kg, 10 kg, whatever quantity may be, in that case, as and when they sell it for less than 25 kgs, it would be considered as taxable. So I'm buying exempt and selling taxable. Also, there can be a reverse scenario. If I am buying taxable, let us say I have bought a product of 20 kgs branded rice. Now, but when I'm selling it in the market, I'm selling it in loose form. I'm selling it 1 kg, 2 kg as the requirement of the relevant customer. So if when I'm buying it, in that case, it may be taxable because it is already in packaged form. But when I'm selling it, it is in loose form. So it would be considered as exempt on the outward side. So outward may be exempt, inward may be taxable. So it does not matter whether inward supply is taxable or outward inward supply is taxable or not. We have to independently assess if our outward supply is taxable in nature or are exempt in nature. Okay. Now, these are the list of all the products which have had their rates modified. Meat, fish, curd, lassi, buttermilk, chhena, paneer, honey, all these animal related products, vegetables, a lot of similar root vegetables related items, makhana, wheat, rye, barley, oats, maize, corn, rice, grain, buckwheat, millet, all these products have packaged, have their questions answered based on whether the product is taxable or not. To summarize for all of you, if any product is pre-packaged and labeled, it is going to attract GST. If it is not pre-packaged and labeled, in that case, it is not attracting GST, it will be exempt. Now, pre-packaged and exempt also requires one more condition, which is it should have the required declarations. That means the law should require the declarations on these products as per the legal metrology rules. For example, for more than 25 kg products, there is no requirement of declarations on those packages as per legal metrology rules. So that would be still considered as exempt. Or if it is supplied to institutional or industrial consumers, it does not require any declaration. That would be still considered as exempt. But if it is required to have declarations and they have not been declared, still it would be considered as taxable. So any product which is required to have declarations under the legal metrology rules would be required to have taxability under the GST law, right?
Shubham, sorry to interrupt. If we can just go back to the slide once again of the list of
Yes.
among all these items which are required to be pre-packed and pre-labeled as per the law, I guess they have missed upon this item of bread.
Okay.
That was a
Good
small
catch.
observation which I had made. So I just wanted to share with everyone. Just
Okay. So that is still based on brand name, is it?
yeah, it's a brand name. It's pre-packed. It follows all the LMR and rules and everything, but still it is not taxable because of the HSN codes and whatever rates has been prescribed against these items in
Yeah,
the new schedules. Bread is still not taxable.
right. So basically, bread is still based on taxability of brand name, whether or not the product is branded. So if it is branded, in that case, it is taxable. Otherwise, it is exempt, right?
No. Bread is still it's exempt. We'll have a separate discussion on that.
Okay. All right. Okay. I think Deepika Di has a query on this. Yeah, you can
Yes,
ask. Yeah, Deepika Di, please.
yes, hi Shubham.
Hi.
So, based on the discussion that we had, can we conclude that in case if it is, if a super distributor is selling some products, he has pre-packaged and labeled products, but if in case he's selling to hotels, it would be exempt because they are institutional buyers, although it
Absolutely.
has all the declarations. And in case if it is being sold to retailers or to sub-distributors, it will be taxable.
So normally when we sell to institutional consumers, normally it should contain the declaration not for retail sale. Normally. So
Actually,
any,
they don't have it. Practically, they just have one stock. It is pre-packaged and labeled. It may go to hotels depending on the order, or it may go to the retailers. Can we conclude that since the buyer in this case are hotels, it would be exempt, or it has to have those declarations that is it is not for retail sale?
it has to have those declarations, according to me. Because without those declarations, in my view, it is still falling within the legal metrology rules. If I'm selling to institutional consumers, I cannot make any declarations. But if I'm making a declaration that it is for sale to a normal consumer and I'm selling it to a hotel, according to me, it still would be taxable. The packaging should be completely different. That's what I believe. Otherwise, it's very difficult to justify in every case the taxability.
Okay.
Yeah. Okay. Proceeding further. Now we are going to talk about the time limit in case of extension of refund application. We all know through Supreme Court order dated 23rd March 2020, and with a number of slew of orders which had come in between also, finally, which came on 10th of January. There was a period of limitation which was excluded for filing of petition, applications, suits, appeals, all quasi-judicial proceedings from 15th of March 2020 to 28th of February 2022. Right? For 2 years, it was stated that the time limit would not be counted. And if any time limit was getting expired within this period, that would be excluded. And at least 90 days further from 28th February 2022, we would get for filing of any of these petitions or applications. Now, the question that was arising was whether filing of a refund application, can it still be considered? Can filing of refund application still be considered within the ambit of this limitation period? Whether this, rather the Supreme Court order, whether the filing of refund application would be covered by this Supreme Court order. Now, Circular 157 was issued, and it was a thoroughly confusing circular, to be honest, because on one end, the circular was saying that application for refund is nothing but a quasi-judicial proceeding. And for some reason, they concluded at the end that extension of limitation period would not be applicable for refunds, right? This is what was the situation. That said, refund application would not be covered by this, which was very surprising, considering the fact that they were saying it is a quasi-judicial proceeding and Supreme Court order was covering all quasi-judicial proceedings also. So this was very confusing. Now, a lot of people went before different high courts throughout the country, and number of writ petitions had been filed, and a lot of writ petitions received a favorable order. Madras High Court, GNC Infra LLP, Seher Supply Chain Consulting, Bombay High Court. In Calcutta High Court, we have this Rafflesia Trading Private Limited. All these cases, we received a favorable order from the Honorable Calcutta High Court and different high courts, that they said that refund applications would also stand extended. That is what was stated. Now, the GST Law Council has now stated that time period from 1st March 2020 to 28th February 2022 would be now excluded. So after these judgments, the GST Council has come up with an amendment in the law itself through section 168A, which is a special provision which has been inserted because of any kind of natural calamity like COVID and health related hazards. So there, under this, they have provided an extension of limitation period, stating that for now, the limitation period for filing of refund would be excluded for the period from 1st March 2020 to 28th of February 2022. It would not be counted. Now, the question that was coming in was, what is the period that would be excluded now? Let us say there is a refund for April 18. April 18 refund should be expiring in April 20, assuming based on the actual due date, the relevant date may differ. So it may be expiring somewhere in April 20. Normally, period of exclusion is from March 20 to April 20. Let's assume 2 months. The period of limitation for 2 months only, it was supposed to expire in April 20. In other words, now the limitation period would be April 2022. That means even though they have extended the limitation period, it seems that the application for the first few months, April 18, May 18, June 18, which was supposed to expire during the COVID period, even though they have brought in the amendment today, already stands expired, right? So people who have already filed their application, they can maybe, and if they are continuing their proceedings as per law by filing an appeal, or let's say they are having any kind of proceedings which are still pending in adjudication in case of erroneous refund, they can take benefit of this and say that this was within the limitation period. But what about people who have not filed their refunds? To my mind, all these cases, we should definitely file a claim, because right now, there cannot be an amendment in the law which is retrospective, which are against me. Now you're giving me a benefit, and now you're telling me that this benefit is given at a date which is already expired. It is having a very absurd kind of meaning. So in my view, we should file this refund application. And if they don't consider this as per the amendment in the law, at least the Supreme Court order is still there to protect us, right? So we should still, according to me, go with the application. in my view. And because this limit, and in particularly those cases where deficiency memo had been issued, in those cases, a lot of cases, they have issued a deficiency memo for limitation period, for stating that refund was filed beyond the limitation period. In all these cases, we should file a fresh refund claim. Let them reject it, because this matter, according to me, still should have applications allowed from April 18, even though there is not, though the direct interpretation does not come out of this provision. Normally, in all other cases, for example, the refund application was of Jan 21. Ideally, it should have been expiring in Jan 23. Since Jan 21 to Feb 22 is excluded, which is 13 months. 13 months will get added from 1st March 2022, which is, let's say, 13 months would be added from Feb 2020, from March 2022, right? Whatever time limit is there, it would get excluded, right? So we need to be very clear that this time limit, when is it getting expired? So it needs to be calculated through the relevant period, because whatever period is there between this 1st March to 28th Feb would get excluded. Refund, let's say, of July 2020. July 2020 refund was supposed to expire in July 2022. Now, since July 20 to 28th Feb 2022 is excluded, which is 20 months. 20 months would be added from 28th February 2022. 1st March 2022, I'll add 20 months more for the refund application claim. Based on that, I would be calculating my period of limitation for filing of refund claims. People who have already filed nil refunds, a lot of people, what they have done is, because they thought that the period of limitation is expired, let me not apply any refunds for this period anymore. What they have done is they have filed a nil refund claim. Let us say for Jan 2020, they thought that the period of limitation is already expired. So what they have done is they have now filed a refund which is nil for this period. Now, even if that has expired, in my view, we can still file a refund application under any other category, because this law is giving us a benefit. And simply because I have filed a nil refund does not mean I cannot file a refund application again. We should definitely file a refund application again under the category of residual category of filing of refund. There is an option of filing of refund on account of any other reason. There you can give all the documents and file the refund claim, right? Mind you, over there, if you are filing the refund under any other category, there is no concept of automatic debit from the electronic credit ledger. There is no automatic debit from the electronic credit ledger which happens there. Manually adjust that. Okay. Next, at the same time, a similar extension has been granted for issuance of order in respect of erroneous refund claims. Now, this is extremely important, that now what they have done is they have also given a limitation period for erroneous refunds. They have given an extension to the assessee for filing of refund. At the same time, they have given an extension to the department for issuance of demand order and notice in respect of erroneous refund, and it would be the same concept. 1st March 2020 to 28th February 2022 is excluded for them. So now department, if they have issued any kind of wrong order or wrong refund, in that case, what they can do is they can issue a show cause notice by assuming that 1st March 2020 to 28th February 2022 does not exist, right? Next, a very important amendment. Now for Feb 17, for 17-18, 2017-18, what was supposed to be the due date for any kind of proceedings, demand and order, any show cause notice, any proceedings, what was supposed to be the due date? The due date was supposed to be 3 years from the due date of furnishing annual return. So the outer limit was 3 years from the due date of furnishing annual return. So normally Feb 80 for 2017-18, the due date was Feb 2020. So 3 years from the date of annual return was Feb 2023. Now, at least 3 months before I am required to issue a notice as per law. Ideally, my time limit would have expired November 2022. So within 4 to 5 months, the department's time limit for issuance of notice in not fraud cases, where there is no limit, when there is no intention to evade payment of tax, would have expired. Now, what they have done is they have extended the limitation period for issuance of order for such demand up to 30th September 2023. So in other words, up to 30th September 2023, now the department can pass an order in cases where there is no intention to evade payment of taxes under section 73. This time period would get expired on 30th September 23. 3 months before that, they can issue the notice maximum, which is 30th June 2023. So for 1718, they can issue a notice up to 30th June 2023, and they have to pass an order by September 23. Intention to evade payment of tax. When there is an intention to evade payment of tax, that notice would be issued under 74, and it would be having the regular timeline of 5 years as prescribed by law. This is only an extension which has been prescribed for section 73 related extensions, right? Next, in case of refund, there has been a change in the formula for the refund calculation. The apex court, in case of VKC footsteps, this was a Supreme Court judgment which was in case of inverted duty structure, had stated that even though you cannot apply refund for input services, mind you, in inverted duty structure, the refund is allowed only for inputs, net ITC on inputs. Refund is not allowed on input services. So in this case, the apex court had said, yes, the department was right that the refund was only allowed for input services, inputs and not input services. Still, they had said there is an inherent deficiency in the formula which is for inverted duty structure refund calculation, and it asked the council to look into this matter. Let's look at the deficiency which was there. So if you exclude this red portion, this is essentially the formula which existed as on date before this amendment. Turnover of inverted rated supply of goods and services divided by adjusted total turnover into net ITC. This is the formula prescribed as per law. Inverted rated turnover divided by total turnover into net ITC. Fair enough. This formula remains the same, and this refund is only on net ITC on inputs. Less tax payable on such inverted rated supply of goods or services. Now, this is where the trick comes in. The law assumes that whatever tax I am paying on inverted duty structure is on account of inputs. Why? Because if you look at this proportionate formula, inverted rated turnover by total turnover into ITC, it basically assumes net ITC on inputs, which is proportionate to the inverted duty turnover, right? Net ITC on inputs, which is proportionate to inverted rated turnover. Now, when they are reducing tax payable on inverted rated supply of goods or services, they are assuming that entire tax on inverted rated supply is being paid from inputs, which is absurd, because when I'm paying taxes from my credit ledger, I am paying not only taxes on my inputs through my on my inputs. I'm using the balance of electronic credit ledger, which constitutes of input and input services both, right? So they have, what they have done is, now they have stated tax payable on inverted rated supply would also be proportionate. Basically, ITC on inputs divided by ITC on input and input services. So the second part of the formula would be proportionate, and they would calculate the refund by only considering net ITC on inputs divided by ITC availed on input and input services both. So in effect, this now will reduce my this second part of my formula, because since it becomes proportionate, the second part of my formula, which is the reduction portion, goes down and my refund amount goes up. In effect, it would result in the increase of my refund amount, right? So it will result in the increase of my refund amount. Next, refund amount in case of export without payment of tax. Now, there are certain provisions which are with regard to export without payment of tax. We all know for export, the calculation of refund amount is export turnover divided by adjusted total turnover into net ITC. Net ITC is basically input and input services. Fair enough. What is the value of export that you should be taking for turnover of zero rated supply? What is the value of export as per this? So they are stating here, value of goods exported out of India shall be taken as FOB value declared in the shipping bill or value declared in the tax invoice, whichever is less. So FOB value is shipping bill or value declared in tax invoice, whichever is less. To be honest, this provision was already there in the circular as per 125, but it was never in the law. Now what they have done, they have inserted it into the law that whatever value is declared in the shipping bill without including any insurance and freight, and I should compare it with the value as per tax invoice. That value should be included both in my numerator and my denominator for export related supplies, export related turnover. And that is the value that we should be taking, the lower of these two, right? Because mind you, the value as per shipping bill may be different from the value of tax invoice, because tax invoice is based on my general accepted accounting principles, whereas shipping bill values are defined as per customs. The customs law every 15 days comes up with the value which we should be taking, and that value is in almost every case different from the tax invoice value. So in that case, we should be taking lower of these two values for the purpose of calculation of our refund amount. Next, refund under export with payment of tax. In case of refund on export with payment of tax, we know that there is an automatic process of refund. That means whatever I am filing in my GST returns, that should exactly match with whatever is there in my shipping bill. If there is any mismatch between these two, in that case, the refund is not granted to me, right? It has been now stated that if there is any mismatch in the data which is furnished in the shipping bill and in GSTR1, since the refund is not granted to me, now it would be assumed that the refund itself is filed on the date when this mismatch has been corrected. Till this mismatch is corrected, till that time, the refund is not deemed to be filed. And once this mismatch is corrected, automatically the refund is filed and the refund should come to our bank account, right? So ideally, my shipping bill, my GSTR1 should be in line with each other. This we all know, but this was only provided in the system and not under the law. So now this has been inserted in the law. Now, in case where there is export of goods with payment of tax, there is an automatic refund system based on the shipping bill, right? But in a lot of cases, what happens? Export with payment of tax is there, but that amount is, let's say, blocked from the customs website. That export with payment tax automatic refund module is blocked for a particular SSE. Why? Because let us say he's classified as a risky exporter till his proceedings are concluded, till he's cleared of that allegation, he still would be considered as a risky exporter, because of which his automatic refund claims are withheld or suspended. Or the second option is that, let us say the exporter is having any kind of demand pending against him under the law. So till he discharges that demand, his export refund amount is withheld. Now, even if these conditions are fulfilled, that he is now later on become non-risky, the usual process is to get this automatic refund once again enabled on the customs portal. Usually this takes a lot of time. And even if, let's say, the proceedings are going on against the risky exporter, but there is a genuine problem of working capital with the risky exporter is facing, and till now the proceedings are not concluded. So in those cases, whatever application is made through export with payment of tax, I am doing through my returns. So export with payment of tax, basically whenever I file a return, automatically the refund should be granted to me. Since the amount is not automatically being granted and the automatic refund process is suspended for these people, what they have now got an option that whatever invoices they are now filing in GSTR1 under export with payment, there wouldn't be an automatically RFD01, which is system generated, which would be provided. So automatically a system generated RFD01, which would be generated for processing. Automatically RFD01, there would be an automatic generation online, and thereafter the jurisdictional authorities, would be verifying the application and thereafter discharging the refund after due verification of the refund claim and the relevant documents there too, right? So this would enable those people who are under export with payment of tax, but their refund stands blocked because of a number of reasons. Now, a lot of cases, what happens is I, let's say, apply for a refund amount, right? Now, that refund amount is granted to me. Later on, the departments, let's say the refund was for ITC. I had applied for refund of export and the ITC refund was granted to me. Later on, the department issues a show cause notice to me stating that there was an erroneous refund granted to me. Thereafter, what I do is, since this refund was erroneous, I pay back that amount back to the government. Since when I pay back that amount back to the government, in other words, it means whatever ITC I had encashed it. Now that ITC that amount has gone back to the government, but that amount should once again be recredited. If I have taken a refund from my credit ledger and that refund is paid back, that amount should come back to my credit ledger. Right now, there is no mechanism for this. For this, they have introduced a form which is PMT03A, through which these kind of amounts would be recredited back. Similarly, persons who are importing goods under advance authorization, EPCG, EOU, all these people, they cannot import without payment of tax if they are exporting with payment of tax. But a lot of these authorization holders, they had imported without payment of tax and exported with payment of tax. So what the government did was the government asked them to pay the amount of import, which was the tax which was foregone. So these people paid the amount of IGST, which was foregone at the time of import. So whatever amount they paid, it should come back to their credit ledger, because whatever amount they are paying on their import should be ITC allowed as ITC. As a result of these people again can also file their PMT03A for getting this amount back in their credit ledger. Present exemption of IGST on import of goods under advance authorization EPCG EOU scheme is still being continued. Also, refund on account of inverted duty structure on account of edible oils and coal have now been disallowed. Next, first two we have already covered. We'll cover the third one. Refund allowed when input and output are the same, if the goods are under concessional rate. So let us say I have bought any product at 18%, but my output is at 12%, because the law is allowing me to sell those goods at a concessional rate, 18%, so at 12%, 5%, whatever the case may be. Input and output are the same. What the department alleges is, where the input and output are the same, we are not going to grant you a refund, because they, as per circular 135, when they are the same, we cannot grant you a refund. But we say that my output is at a lower rate, whereas my input is at a higher rate. So at least give me the refund on my input. So they say no. In one of the cases, in case of Shivako Associates, Calcutta High Court, which I also had the pleasure of dealing with, there was a similar matter with regard to packing of gas. So bulk gas was packed into smaller containers and sold in the market. So in those cases, the bulk gas had a higher tax rate, whereas when I'm selling it in small quantities, it attracted a lower tax rate. Department said input and output are both the same, so we will not grant you a refund under inverted duty. This matter went before the Honorable Calcutta High Court, and the Calcutta High Court held that since the output is at a concessional rate, still the refund would be granted. Why? Because the product would be considered as different if I'm selling at buying at a higher rate, selling at a lower rate, even though the product may be the same. So now they have brought in this provision in the law that if the goods are sold under a concessional rate, in that case, the refund would be granted to me under inverted duty structure. Next, non-applicability of section 17 on recipient of deemed export. So normally, if I'm supplying to an EOU advance authorization holder, all these people, in that case, these people can apply for refund. EOU advance authorization holder, they can apply for refund as a recipient of deemed export. And for them, section 17 which is talking about blocked credit, would not be applicable, right? Next, separate refund process for export of electricity. Now, till now, export of goods, export of services, there was a specific proceeding and the process was specified. Export of electricity was one area which was a matter of dispute, and it was covered in the normal refund process. Now they have said there will be a separate process for it. Duty-free shops to be treated as export and opt for refund. So duty-free shops had a separate methodology. Now they are to be treated as export and they can now opt for refund. Now we are going to talk about the changes which have happened in GSTR 3B, right? First and foremost, what they have mentioned is details of interstate supplies made to unregistered persons, composition taxable persons, or UIN holders are required to be mentioned in 3.2, right? 3.2 of this table basically is nothing but whatever taxes I have paid, I have to bifurcate it between unregistered, composition, or UIN holders. And I need to make sure the taxable value and IGST is provided based on the place of supply of each state. So whatever place of supply, let's say I have made any interstate supplies from Karnataka to Maharashtra. In that case, and that supply is made to an unregistered person. If I don't define the place of supply in this case as to the supplies Maharashtra, the tax does not go to the right state. So they have now stated whatever is filed in GSTR 1, based on that, this table will be auto-populated. Based on that, this table will contain the details of state to which I have made the supplies, right? So this will be an auto-populated table which will be based on my GSTR 1 now. But be very careful that we have to fill up this table accurately, because if the tax goes to the wrong state, in that case, we have to still pay taxes to the correct state and then ask for a refund. Insertion of new clause in GSTR 3B. There is a new clause which is going to be inserted in GSTR 3B, and probably it should be active in the next month's 3B itself, which is with regard to supplies made through e-commerce operator under 9 subsection 5, which is transportation of passengers, accommodation in hotels, housekeeping services, restaurant services, wherein the supply is happening through e-commerce operator, and the e-commerce operator is liable to pay taxes. For example, if the supply of restaurant services is happening through Zomato or Swiggy, it is Zomato or Swiggy which will be liable to pay taxes and not the restaurant. Now there are two clauses which have been defined here. First clause talks about taxable supplies on which e-commerce operator will be paying taxes and to be furnished by the e-commerce operator. So Zomato will be furnishing their details in clause 1, which is this first clause, 3.1.11. 3.1.12 talks about supplies which is made through e-commerce operator on which e-commerce operator is required to pay taxes, and it is to be filled by the e-commerce operator. So basically, second clause, if the restaurant is registered, the restaurant will be filling it within clause 2. So mind you, restaurants will no longer be filling up whatever supplies they are making through Zomato or Swiggy within taxable supplies. They have to fill it up. They will be filling it up in 3.1.12. They will not be filling it up in 3.1a, which is the outward taxable supplies, where we usually fill up the 3B values. Restaurant will be filling it up in 3.1.12, right? And e-commerce operator will be filling up in clause 1. Now let us look at the changes which have come in for reporting of ITC. If you look at the red clauses, this was the clause which was there, and this is proposed to be inserted now. 4B1, 4D1, 4D2. 4B1 now will contain as per rule 38, 42, 43, and 17.5. So all of this would be inserted now. Earlier, it was only 42 and 43, correct? In other words, let's talk about section 17.5 first. Section 17.5 is basically block credit, food and beverages, motor vehicle expenses, all these cases which are block credit. Normally, we would have been required to show it under ineligible ITC under 17.5. Normally, a lot of people would not even show it under 17.5 because they would normally expense it out. Now it has been stated, even if you have any 17.5 related ITC, you should first show it under 4A5 and thereafter show it under reversals under 4B1. Since this clause is expanded, if you are reversing any ITC, you should take that ITC and thereafter refund that ITC. And 4D1 no longer talks about ineligible ITC, so it is no longer required to be shown in 4D1. So we have to take that ITC and reduce that ITC under reversals. And 4B2, what does it talk about? ITC which are other than ITC which are permanent and reclaimable. So basically 4B1 talks about ITC which is getting reversed because it is absolute and it is not reclaimable. They are saying 42, 43 reversals. Basically, my outward supply is both taxable and exempt. So I have to reverse the ITC which is proportionate to the taxable exempt supply. That will be reversed under 4B1. This is more or less, according to them, an absolute reversal and not a reclaimable reversal. Whereas according to them, 4B2, which is other reversals, is more or less reclaimable. And these are not permanent reversals. For example, Rule 37, which is if I have not made the payment within 180 days, I should be reversing under 4B2. And when I reclaim it, I should be showing it under the relevant all other ITC. 16.2b. 16.2b basically talks about where the goods or services have not been received. So let us say the goods or services have not been received in the month of January, but it is appearing in my 2b. So they are saying you should show that ITC in the month of January and thereafter reverse it in 4B2. And when you're taking that ITC, show it again in the next month, right? A lot of people don't even account for these entries, because if you start looking for these entries, for example, Jan 22 supplied in Feb 22, right? If you are showing it in Jan 22 as all other ITC and also reversal in 4B2 in Jan 22, and thereafter in February, if you're claiming it again under all other ITC, basically what happens is the all other ITC becomes debited twice and other reversals becomes credited once. For this, you have to look at the February month's books of accounts, because otherwise, how would you find out whether those goods which are appearing in your 2B in the month of January is going to be appearing in your books in the month of February? Because when we usually file returns for January, we don't look at the details for the month of February. So it is very difficult, to be honest, to even report this kind of ITC. First, take that ITC, reverse it, and then show it in the next month. Instead, I would suggest don't show this ITC at all. If the government asks why have we not shown it, we can say simply that here you have given 16.2b, but not 16.2a. 16.2a talks about invoice having been received. If we can say that the invoice have not been received itself in the first place, in that case, I cannot claim that ITC, because if I don't know if that ITC belongs to me. So I would say that the January month's invoice was received by me in the month of February. So I am taking the ITC in the month of February. I will neither show it under all other ITC nor show it under other reversals, right? Also, if let us say we are talking about 16.2AA, which is the newest condition under the GST law for claiming of ITC, that the ITC should be appearing in my 2B. If let us say the ITC is not appearing in my 2B, if the ITC is not appearing in my 2B but appearing in my books, once again I will neither claim the ITC nor reverse the ITC, because it does not talk about 16.2AA. But if the ITC is coming in my 2B but not in my books of accounts in this month, in that case I would not show it either under all other ITC or reversal based on the fact that invoice was not received in the month of January. But if you want and you have a clear system for it, then you can definitely go for taking the ITC in the month of January, reversing it, and thereafter taking in the month of February again. Third condition is 16.2c, which according to me is a very difficult condition right from the beginning, whether the supplier has made the payment of taxes or not. For example, if I have taken the ITC in the previous month, in the month of January, I had seen that ITC in 2B, I took that ITC. Now for 4 months, the supplier has, let's say, not furnished his GSTR1, sorry, GSTR3B. He has not paid the taxes. Till at the end, we find that the supplier does not pay the taxes. We want to reverse that ITC because we feel that the supplier may not pay in 3B, or he is not going to file 3B. In that case, what we can do is we can reverse that ITC because 16(2)(c) condition has been violated under 4B2. Now, when we are reclaiming this ITC, in that case, if I have reversed any ITC and now I want to reclaim that ITC, I need to show it under 4B2 and 4D1 both. So both reversal of ITC and reclaiming of ITC, I have to show it. 4B2 and 4D1, both will be disclosed here. So mind you, example, I have reversed my ITC because I had not made payment within 180 days. I reversed that ITC. When I'm reclaiming that ITC, I need to show it under 4A5, which is all other ITC, and also under reclaim to disclose to the government. This reclaiming of ITC does not affect my credit ledger. 4D1 does not affect my credit ledger. Only 4A5 affects my credit ledger. So I have to show it under all other ITCs so that it enters my electronic credit ledger, and 4D1 to disclose to the government that this is nothing but ITC reclaim. Because if they want to match with their GSTR 2B, they can see that, okay, this is not matching with 2B and this is higher shown in all other ITC in 4A5 because this is ITC reclaimed. It may have been disclosed in 2B of 6 months back and I have already reversed it. But I am, let's say, taking the ITC today, even though it is not appearing in my 2B, since I am reclaiming it, it should be there in 4A5 and 4D1. So the government is clear that yes, this is ITC reclaim. So we should not be doing any matching for this with 2B. Last, ITC which is not claimed because there is ineligible on account of 16(4) and ITC restricted due to place of supply provisions. Any ITC which is restricted due to place of supply provisions or due to 16(4), in those cases ITC will be considered as ineligible ITC, right? In those cases we will be considering it as ineligible ITC. Mind you, when you look at your GSTR 2B, whenever you find that your supplier has uploaded his GST return for, let's say, 22-23, let's say 21-22, after September 22, which is 20th October 22, if they are uploading their GSTR1 after 20th October 22, it is going to appear in your ineligible ITC under 16(4). It will come under ITC not available as per GSTR 2B. In such cases, we are required to make the disclosure under 4D2. Also, ITC restricted due to place of supply provisions. That means I am buying, let's say, any services. I am procuring any services from some other state. And they have charged CGST as GST of that state. Let's say I am residing in Maharashtra in a hotel, whereas my registration is of West Bengal. In that case, in Maharashtra, CGST as GST charge would not be available as a credit in West Bengal because the tax is paid in Maharashtra. That should be coming under ITC restricted due to place of supply provisions, right? All these cases would be covered here. Now we are going to discuss about the provisions with regard to interest applicability, as to what should be the interest that should be charged and what is the process, the manner of calculation of interest under GST. This is very important because the law has now prescribed for the first time how is the interest liability going to be calculated for all kinds of scenarios under the GST law. Number one is late filing of returns. If I'm having late filing of returns and there had been no proceedings initiated against me under 73 or 74. So under 73 or 74, whether there is intention to evade, no intention to evade, does not matter. No show cause notice had been issued to me before that date. I have already filed my returns. If I have filed my returns pursuant to show cause notice, this clause is not applicable. First clause. We're talking about those cases where show cause notice has not been issued. Then before that itself, I have filed my return. In that case, rate of interest would be 18% in all the cases. And amount paid through cash ledger would be the base on which the interest would be calculated. Amount paid through credit ledger would not be considered. And the period that we will count is from the due date of furnishing of return to the actual date of furnishing of return. So due date of furnishing of return to the actual date of furnishing of return. Late filing of return. Second, proceedings initiated under section 73 or 74 before filing. So if proceedings have been already initiated against me, that means show cause notice has already been issued against me. In that case, tax amount, the base amount will be an amount paid through cash ledger and credit ledger, both. So the base amount would be both cash ledger and credit ledger. Period would be due date of payment to the actual date of payment. Rate of interest would be 18%, right? Outward supplies disclosed in a later period. If let's say I have disclosed any outward supplies in a later period, it was supposed to be disclosed in the return of Jan 22, whereas it has been disclosed in the return for July 22. Whether paid through cash or credit does not matter. This is not because of late filing of returns. It is simply late disclosure of invoice. Jan 22 invoice shown in July 22 returns and tax paid in July 22. Here, once again, irrespective of the fact whether the tax is paid through cash ledger or credit ledger, interest would be applicable from the due date of payment to the actual date of payment. Next, ITC wrongly availed and utilized. So there are two things which are important here. ITC should not be wrongly availed only, it should be utilized also. So it should have been ITC wrongly availed and utilized both. In those cases, the interest would be 18%. 50 subsection 3 has been modified. The department had been asking for tax on 24%. Now there is a retrospective amendment in the law. So the interest rate would be 18% first of all. Now we are discussing how will we calculate the interest liability. Now they are saying interest would be applicable only on the portion which is utilized, which is if my balance of credit ledger, electronic credit ledger, falls below the excess ITC availed during any period. So let us say in the month of Jan 22, I had a balance of 1 lakh rupees in my credit ledger. Department is asking me today to reverse ITC of 60,000 rupees. So I already had balance in my credit ledger till the balance is above 60,000 rupees. Interest would not be applicable. If let's say the balance goes to 50,000 rupees in the month of May 22, in the month of May 22, the balance reduces from 50,000 rupees, from 1 lakh rupees to 50,000 rupees. Then from May 22, I would be calculating interest at the rate of 18% on the deficit amount, which is 10,000 rupees. I had to reverse 60,000. Now, since the balance was only 50,000 in May 22, I would have to pay interest on 10,000, which is the deficit, right? If let's say my balance reduces to 45,000 in June 22, on 5,000, I will be paying interest for 1 month. Are you getting this? Jan 22, I had ITC balance of 1 lakh rupees. I have to make a reversal of ITC pertaining to Jan 22 in the month of July 22. I'm making any reversal in the month of July 22, which is pertaining to Jan 22. Now, if I have a balance which is continuing up more than 60,000 rupees up to May 2022, there is no interest applicable till that date. May 22, the balance falls below 60,000, it goes to 50,000. 10,000, 2 months interest would be applicable. Balance falls to 45,000 in the month of, let's say in the month of June 2022. Then in that case, 10 months, for 10,000, 2 months interest is there. For balance 5,000, I would have to pay interest for 1 month on the deficit amount, which is the excess balance availed in the credit ledger. Next, ITC wrongly availed but not utilized. If any ITC was wrongly availed, but the ITC had not been utilized and the amount does not fall below the excess amount. So I have a continuous balance of more than 60,000 rupees for the whole period. In that case, there would not be any applicability of interest. Now they are saying, what is considered as the date of utilization? When do we consider that the utilization date has occurred? When we talk about Jan 22, July 22, how do we state on which date do we say that the utilization has now occurred? They have stated where the tax payment has been made in the return. If any amount falls below the credit ledger and if any tax amount has been paid through the return, in that case, actual date or due date of return, whichever is earlier. This is the date when the interest would be applicable, date of utilization. So if let's say 60,000 rupees, which I am required to reverse, which I said in the month of July 22. Let us say I had reversed in the month of July 22, 60,000 rupees. Now the question comes in, my balance falls below the credit ledger. If I don't have sufficient balance in my credit ledger, let's say in the month of May 22, which date should I consider in May 22? They are saying for May 22, when we are looking at the date when it is falling below the threshold limit, you should look at the due date of furnishing of return or the actual date of return, whichever is earlier. When you're calculating from May 2022, we are calculating 10,000 for 2 months. If my return had been filed on 18th of May, in that case, it would be from 18th of May. If my return had been filed on 25th of May, which is after the due date, it would be 20th May, which is earlier of these two. If I'm paying through DRC 03, when my balance falls below the ledger. So in that case, the date when I have paid through DRC 03, I have paid, let's say in June, 5,000 rupees through my DRC 03. Then the date when I'm making payment through DRC 03, example, I've paid on 5th of June. From 5th of June, I'll be calculating the interest, right? This is what the entire provision is structured. Now, I think a lot of people are waiting for the answer to this question with regard to GST appellate tribunal. Finally, the government has taken some steps to form a group of ministers for forming the GST appellate tribunals, right? And making appropriate amendments in the law for that. As of now, why do we need amendments in the law for GST appellate tribunal is something that we need to understand. A lot of us have a lot of matters pending for filing before the appellate tribunal, but we are not able to file it because it has not been formed till date. The issue here is that the number of benches which are thought of as per the GST law, there aren't enough members for that. Particularly states don't have enough technical members who can be part of so many who can be part of the appellate tribunal. So now the government has formed a group of ministers. They will now look at what is the constitution of GST appellate tribunal, where do we need to make changes in those provisions, if there is any GST appellate tribunal which is required to be constituted in that case, what are the changes in the act that we need, if they need to reduce the number of benches, if they need to change the constitution of the benches, because as of now there is a one requirement of one technical member from the center, one technical member from the state at least, and also one judicial member. So these many members are not available. That's why they are saying that they may change the constitution of appellate tribunal. This kind of amendment may come in the law in the next finance year, next year's finance act maybe. Thereafter these changes will be brought in the law, and thereafter these kind of appellate tribunals will be made. Earlier they had thought that there would be an appellate tribunal in every place. For example, in Siliguri, in Calcutta, in lot of area benches would be there. There would be a state bench. Every area will have a bench. For example, Siliguri might have a bench, Durgapur might have a bench. Thereafter, a state might have one bench, which is Calcutta. Thereafter, region, entire eastern region might have one bench, which is again Calcutta. So this is how they had thought of. But now it may happen that we might not have so many tribunals or maybe so many benches. We might have benches sitting in Calcutta because there aren't enough members. So how will they change it is something that the group of ministers will deliberate on. And we might soon have a decision on this as to how the states want to approach this, and the law would be amended accordingly, right? Next, duty credit scrips. Now, in case of persons making export of goods or services, they get a benefit from the government or from the DGFT in terms of duty credit scrips. These duty credit scrips allows a person to import goods without payment of tax. So this is like, because I'm making certain export and I'm bringing foreign exchange to the country, they are allowing me to get some benefits by not paying taxes on while I'm importing goods. I would be getting benefit of the basic customs duty. Now, I may not be importing goods, but I would maybe exporting goods. So if I'm exporting goods, I'm getting these duty credit scrips, but I'm not able to use it while making imports because I don't have imports. So what I do is I'll sell these duty credit scrips in the market. Duty credit scrips have been provided to be exempt under the GST law. So when I sell these duty credit scrips in the market, it is an exempt product, right? As per rule 4243, if my outward supply is both taxable and exempt, I need to make proportionate reversal of ITC to the extent I'm making exempt supplies. So a lot of people had to make reversal of ITC because their output was exempt in the form of duty credit scripts. Now an explanation has been inserted that no longer a reversal of ITC under rule 4243 will be required if my outward supply is exempt. If my outward supply is exempt in the form of sale of duty credit scripts. So if I'm selling duty credit scripts, still there is no requirement of reversal of ITC as per law. Transfer of balance from electronic credit ledger from one branch to the other branch of any entity. So transfer of balance from electronic cash ledger, not credit ledger, I meant cash ledger. So this is again a provision which was brought in by the Finance Act 2022, which has been implemented now, that if I'm having balance in my electronic credit ledger, electronic cash ledger in one state, let's say in Tamil Nadu, I have a balance. Now in West Bengal, I want to make a payment in cash. Now I want my liability, my cash ledger to shift from Tamil Nadu to Calcutta. So I can simply file a form so that my balance from electronic cash ledger from Tamil Nadu to West Bengal, it gets shifted, right? That means I can effectively transfer my balance of my cash ledger from one branch to the other branch, provided it is under the same PAN. I cannot shift it to any other person. It should be under the same PAN, under separate GST IN, doesn't matter, but should be under the same PAN, right? Relief for composition dealers and resolution of negative balance in ECL. I'm sure everyone must have faced this. A lot of people who are dealing with composition dealers, they had made some mistakes in filing of GSTR 4 by not filling up certain tables, because of which the balance in the cash ledger had become negative. GSTN has now resolved this issue because the payment has now, the electronic cash ledger is now become positive, or rather it has now become zero. Whatever amount was coming as negative has now been resolved. Now, as a result of which, for composition dealers, GSTR 4 and CMP 08 was extended, which still stands extended. For GSTR 4 for 21-22, the due date is now extended to 28th July. And for CMP 08 for first quarter, it is now extended to 31st of July, right? Declaration on invoices by taxpayer above the threshold of e-invoicing. Mind you, there is a new requirement as per the invoicing rules that if I am having a turnover beyond the threshold limit of 20 crore rupees, which is the current requirement of law for generation of invoice, 20 crore rupees in any of the financial year right from 17-18. In that case, I am required to generate invoices. But these invoices are not required to be generated by a few category of taxpayers who have been exempted as per law. Example, SEZ units, insurers, banks, NBFCs, GTA, passenger transport, ISD, cinema halls, all these people are not required to generate invoices. So for these people, it has been mentioned that they need to give a declaration in their invoice that I am not that aggregate turnover, though it exceeds the prescribed limit, we are still not required to generate e-invoicing as per the relevant provisions of the law. So this declaration is required to be given by them so that the recipient, because the recipient may be misguided otherwise, the recipient, whether he can avail ITC or not, depends on the fact whether the supplier who is required to generate an e-invoice has generated it or not. So if I am supplying goods to you, I was required to generate e-invoice, but I have not given you an e-invoice. In that case, your ITC may be denied. This was a major issue. So in a lot of cases, recipients used to ask for e-invoices even for these category of people who are not required to generate e-invoices. So the government has now said you are now required to give a declaration so that the recipient is not misguided that he should have received an e-invoice, so and his ITC is now going to be denied, right? So this is now going to be settled. These people will now give a declaration. Having said this, there is a notion that even B2C exempt supply people have to give this declaration. To my mind, from the literal reading of the language, it seems yes, they are covered. Though from the intent of the law, it seems that it is not required for them to get any invoice, because it is only to ensure that the recipient's credit is safeguarded. And in case of B2C supplies, exempt supplies, there is no passing of credit. So there is no requirement of giving this declaration, to my view. But having said this, the literal language seems that it may be required. So it is something that is a business call whether we want to do it or not do it, right? Now, there have been certain changes in GSTR 9, or rather I would say not changes, but certain updates on GSTR 9. First of all, for up to 2 crore rupees, exemption of GSTR 9 is still valid for this year. So up to 2 crore rupees, you are still not required to generate, you're not required to file GSTR 9 for this year. And a change, your declaration of HSN codes for outward supply has now become mandatory in GSTR 9. So I'm now required to declare my HSN codes in table 17. So table 17, which is the HSN code, which we would have left blank for in GSTR 9 for a while, this is now required to be declared. Now, it may seem for most of us that yes, this amount is something which can be directly borrowed from GSTR 1. Yes, you can borrow it from GSTR 1. GSTR 1 contains your HSN wise details, whatever you are furnishing. Only distinction is that the rate column is extra in GSTR 9, which was not there in your 3B, or rather it is not there in your GSTR 1 rate of tax. So under the same HSN code, if you are having two different rates of taxes, that bifurcation you might have to manually do if it is not there in your GSTR 1. Ideally, the HSN code wise rate of supply should be available with you, so that for the whole year you can declare it in GSTR 9 at once, right? Automatic revocation of suspension of a registration upon return filing. On account of certain reasons, the registration is liable to be suspended. This suspension could be on account of significant difference between GSTR 1 or significant difference between GSTR 2B and 3B. So there is a rule 21 sub-rule 2A, which says that if you have any significant difference between 1 and 3B, or any significant difference between 2B and 3B, this may be because you have not filed your returns properly, or in last month you have by mistake disclosed any wrong values. In that case, the government has an option of suspending the registration. Once you file the next month return, assuming your deficiency or your difference gets resolved, the threshold, whatever the government has provided for significant differences, if that gets resolved, in that case, upon proper filing of returns, the provision for automatic revocation would be there. That means automatically my suspension of registration would stand revoked, right? So my registration would no longer stand suspended automatically. Next, GST Council has provided this, that in case of new registrations, they are going to put in place some artificial intelligence which will improve their risk-based monitoring process as to who are the non-compliant taxpayers. They will want to have a background check of those taxpayers and make sure that they give registration only to those taxpayers who are who can be given these registrations, right? So it may happen that only those people would be given registration who would be compliant as per their risk parameters. This is even before registration. Before registration, there would be an artificial intelligence methodology through which they will identify if these taxpayers should be given registration or not, right? And any person who is non-compliant, which they know, they would not be granted registration right from the beginning. Now we'll have to see, because as it is, the registration process is already very cumbersome for a lot of people. So whether what happens after this kind of process is notified, that is something that we'll have to see, right? Now, next is proviso applicable for section 17(5)(b). So what we need to remember here is that if we look at section 17(5), section 17(5) talks about ITC, which is blocked, right? Now there are three clauses. If you can see in front of us, food and beverages, outdoor catering. Second clause talks about membership of club, travel benefits to employees. Thereafter, there is a proviso. The proviso says that if it is obligatory on the employer to provide anything to its employees, in that case, ITC would be allowed. Question was whether this proviso is applicable only to the third clause, which is travel benefits, or is it applicable to all the three clauses? It has been clarified that this would be applicable for all the three clauses and not just the third clause, right? So if it is obligatory on the employer to provide it to the employees, in that case ITC would be allowed. Also now UPI and IMPS is a methodology through which you can make payment of GST. UPI and IMPS is now prescribed as a methodology for making payment of GST. Though in my humble view, we should not follow UPI for making payment of GST, because normally in case of banks, if the amount gets stuck up somewhere, it does not come to your cash ledger, you can approach the bank. But UPI has a completely different methodology, the way it works. There is no direct way where you can coordinate and ask for this money. If you are paying a significant quantum from UPI, I would strongly discourage it. I would state that you should still follow NEFT, IMPS or net banking, because UPI, if the money gets stuck somewhere, it does not come to your cash ledger, it becomes very difficult for you to coordinate as to where the money is stuck. That's what my personal experience says. Anyways, next, blockage of ITC on lease under 17.5 vehicles. So it is very clear, they are saying ITC is blocked on leasing of motor vehicles. Other than leasing of motor vehicles, ITC is not blocked for leasing in any other case. If you're leasing anything other than motor vehicles, in that case, the ITC would be allowed. Next, perquisites by employee to employer. We all know services provided by employee to employer in the course of employment is a Schedule 3 supply or a Schedule 3 activity, that is neither supply of goods nor supply of services. So employee to employer is neither supply of goods nor supply of services. Now it has been mentioned very clearly. If any perquisites are being paid by employer to the employee, any perquisites which is subject to the employment agreement. If in the employment agreement, I am supposed to give my employee a rent-free accommodation, and I'm not charging anything, I'm giving him a rent-free accommodation. It is not a gift, it will be outside the ambit of GST. The moment anything falls outside the employment contract, I'm giving him anything which is beyond the employment contract. I'm giving him any gold coin, I'm giving him any kind of free benefit, or I'm giving him any kind of benefit which is not part of my employment contract, then it would be considered as a gift. Gift, if paid more than 50,000 rupees in a financial year to any employee, it would be considered as a supply without consideration. So please be very careful in case of employer-employee agreement, that whether if anything is being paid by employer to employee and it is being shown as part of salary, if anything which is beyond the amount which is paid in cash, if it is being paid as a perquisite, if any amount is being paid as such and is not part of the employment contract, I would strongly suggest that you should incorporate it. Otherwise, the government has the power to consider it as a Schedule 1 supply without consideration, for which tax may be levied. Utilization of cash and credit ledger. Now, lot of cases we might have faced this issue with the department, that the department says that your self-assessed tax, fine, you can pay through your cash ledger or credit ledger. But if we are issuing any notices, then you cannot pay that amount through your cash ledger. You have to pay that, you cannot pay through your credit ledger. You have to pay that amount from the cash ledger. How do they come to this interpretation? They come to this interpretation because of the fact that whenever any amount is paid through the credit ledger, in that case, that amount should be part of my final credit ledger, right? If any amount is provisionally assessed, it will not be part of my final credit ledger. That is what they are saying. Because section 41 of the CGST Act says, if any amount is taken before matching as per GST Act 2 and 3, which was the earlier law, in that case, that amount is provisionally assessed, and that amount you can use only for making payment of self-assessed liability, not any liability which is determined by the department. But since GST Act 2 and 3 never came into picture, they have now clarified very clearly, even if you have any demand pending under the GST law, if you have any demand pending under the GST law, then that case, if you can make the payment of that demand through your credit ledger if you have balance available in that. But mind you, payment can only be of output taxes or ITC. If any payment is of RCM, it has to be by cash only. If any amount is in the form of interest, penalty, fees, or any other amount, that amount payable would also be by cash only. We cannot make the payment of taxes through credit. Interest, penalty, late fees, everything has to be paid by cash. This amount cannot be used for making payment through credit ledger. Repayment of erroneous refund received also can be only through cash if this amount had been received in cash. So if I've received any amount in cash, the refund, the repayment of this amount also can be only through cash ledger. I cannot make the payment through the credit ledger. Next, liability in case of fake invoicing. This is again very important because these kind of issues have been coming in so many times throughout the country, and even genuine taxpayers have been troubled by this. A person, let's say, who has 100 transactions genuine but one transaction which is non-genuine, for them what would be the situation? A person who is issuing fake invoice, whose purchase is genuine but his sales is not genuine, a person whose both purchase and sales are not genuine, a person whose purchase is not genuine but sale is genuine. For all of these persons, what would be the liability on the from the perspective of the government? Let's see. This is the provision which has now been introduced. Liability on A, B, C, D. On these are 4 category of persons on which the liability is to be imposed. 4 category of persons. Liability on A. What would be the liability on A? If any invoice is issued by A without supply, his purchase was genuine, but his sale is not genuine, right? In this case, for person A, mind you, when he had issued an invoice, fake invoice, he has already paid taxes. He has already passed on ITC. He has already paid taxes. That's why he has been able to pass on the ITC to person B. In such cases, there would not be recovery of any output taxes. Even if he has not paid taxes, still there would not be recovery of output taxes from that person. Why? Because he has not made any supply. If I have not made any supply, how come the government can ask a tax from me? So supply is only, a tax is only for a supply. Without, if I'm issuing an invoice without a supply, in that case, there can be no tax recovered on me. But there may be a penalty provision under section 122(1)(2), which is for issuance of invoice without supply. So in case of one, if I'm issuing any fake invoice, in that case, a penalty equivalent to 100% of the tax amount would be applicable on me, because this clause says very clearly, if I am issuing any invoice without supply, penalty would be applicable upon me. Now, what about person B? Person B is receiving a fake invoice and also issuing a fake invoice. He's in the business of doing this. Can taxes be recovered from this person? The answer is no. Since he is not having any output taxes, there cannot be any taxes recovered from him. And also, his ITC, he has already used it for payment of taxes. So there cannot be any recovery of ITC also. Neither ITC nor output taxes can be recovered because I am issuing a fake invoice and receiving a fake invoice. But there will be a dual penalty upon me. Penalty 1 is for issuance of invoice without supply. Second, taking of ITC without receiving the invoice. So 100% of tax on the output side, 100% of the ITC on the input side. Both would be considered for the purpose of penalty on me, right? Liability on C. Now, what will be the liability on C? ITC is to be recovered from C as ITC was availed without receipt of supply against 16(2)(b). Now, C is having his purchase which is fake, but his sale is genuine. So for him, if he has had any fake invoice which he has received, then that ITC needs to be recovered from him because he has received that ITC without actually receiving the goods or services. So he has to pay back that amount of ITC. Interest would also be charged under section 50, depending on whether he has used that ITC or not. So if he has availed and utilized that ITC, interest would be applicable. If not, interest would not be applicable. Penalty under subsection 74. Penalty under section 74 would also be applicable, because when the notice is issued on this person, the notice will be normally for recovery of tax, interest and penalty against the fake invoice. So if the penalty is already paid under section 74, no penalty is required to be paid under 122(1). So ideally he would be liable to pay tax plus 18% interest if the ITC is utilized, plus a penalty under section 74, right? For D, of course, there would be no proceeding because D has received the genuine supply, right? So this is how the entire transaction. So in this example, I have tried to cover each and every type of person, right? Each and every type of person I have tried to cover in this example. A, B, C, D, whether his purchase is genuine, sale is genuine, both are genuine, both are not genuine. All kinds of persons are covered here. Now, let us talk about the changes which has come for GTA and the transport sector. Now, after these changes, there are effectively 3 options now with GTA. First, they can either have reverse charge without ITC. That means I am the GTA, I am supplying to you, you are required to pay GST under RCM. This is 5% and you will be paying under RCM. Second, forward charge with ITC 12%. Forward charge with 12%, that means I as the GTA, I am charging 12%. These 2 options were available under the law. Problem was with regard to a lot of people now charging GST at 5%. Transporters were unaware, or there was this, since this sector is unorganized, a lot of transporters thought that they could charge taxes under 5%. They were under the impression either it is 5% without ITC or 12% with ITC. So what they used to do was they used to charge taxes at the rate of 5%. The recipient used to get confused because the recipient was only allowed the condition of non-payment under RCM if the supplier had charged 12%. But if the supplier, that is the GTA, is charging 5%, still the recipient was required to pay taxes by the government because the supplier was charging at the rate of 5%, whereas there was no provision for charging of GST at 5% by the supplier, which is the GTA. So now what they have done is they have essentially made available 3 options with GTA. 5% without ITC under RCM, 12% with ITC under forward charge. GTA will charge at the rate of 12%. Third option is forward charge without ITC under 5%. So effectively, GTA will now also have the third option of paying under forward charge without availing ITC at the rate of 5%. So moment reverse forward charge 5% is there, reverse charge is not attractive. Before this amendment, if forward charge at 5% was there, still reverse charge had to be attracted, right? This was a major issue. Also, these GTA, first they adopted, let's say 5%. Now they want without ITC under reverse charge. Now they want to move to forward charge with ITC. This option was available with them. But once they moved to 12% with ITC, they did not have the option of going back to reverse charge without ITC. So a lot of these GTA were confused. How do they move from the 2 options, 5% to 12%, 12% to 5%? Because the law prescribed the condition that if you go from 5%, 12%, you cannot move back to 5%. But there was no condition for 5 to 12. As a result of which there was a lot of GTAs who had a lot of confusion, and a lot of them had moved from one option to the other without thinking. And that is why now it has been said very clearly. Under the law, GTA will have once every year, they will have an option that they can exercise. Either go for 5% without ITC RCM, 12% with ITC forward charge, or 5% without ITC forward charge. Any 3 of these options, they are available with these GTA, and they can make a declaration on or before 15th March of the preceding financial year. For example, for next year, let's say for talking about 2023-24, dealer have an option to make this declaration in Annexure 5 by 15th March 2022. There is a format which is prescribed as per law. I'm not going in that format. That format I have to declare. In that format, I have to declare before the government that I want to shift to this option, or I want to opt for this option for 23-24. What about 22-23? For 22-23, they say that we can exercise this option by 16th August 2022. Before 16th August, we have to exercise this option. Till this option is exercised, the GTA, if he's making payment under 12% with forward charge, he can continue to do so. Later on, from 16th August, if they want to move to RCM, if they want to move to forward charge without ITC 5%, they have this option. Also, if they are charging taxes under forward charge, if the GTA is charging taxes under forward charge, recipient will get the ITC for this, and the recipient does not need to pay under RCM. In order for the recipient to be very clear what the GTA is doing and the fact that the recipient does not need to pay RCM, they have now inserted a declaration which is now required to be made by the GTA on their invoice. All these declarations are now required to be made by the GTA on their invoice, so the recipient is not misled whether or not they are required to pay under RCM. This declaration, what does it say? We have taken registration under CGST Act and have exercised the option to pay tax on services of GTA in relation to transport of goods supplied by us during the financial year at the rate of 5% under forward charge or 12% under forward charge that they will declare. So they will state very clearly to the recipient that we have now opted for this declaration and we will now be paying taxes under RCM. We will now be paying under, we will be now be paying under forward charge, and we will be paying at this rate under forward charge. So the recipient is aware, okay, this person is now going to do this, and this declaration is going to be there in every invoice. And the recipient is clear that what ITC he needs to take based on that, and whether he needs to pay RCM or not. It has also been explained that support services in relation to transport would exclude GTA services. So support services in relation to transport, if let's say there's an independent services of warehousing or independent services of loading, unloading, all these would be separately charged and it would not be included under GTA services if they are being provided separately and not as part of GTA services, right? Now, renting of goods carriage, where cost of fuel is included in consideration. So if let's say I am renting any goods carriage and I am giving it to from one person to the other, I am giving from person A to B. Person A is giving goods carriage to person B for renting. There can be two situations. First, when I am giving it to person B, I am recovering the fuel cost. I am giving it based that I have an operator, let's say my driver is there with me, the fuel cost is included in the value. Now I am recovering that amount from the recipient. In that case, the rate of GST will be 12%. But I have given it on time basis, on 3 days, 4 days. The recipient is having his own driver. The recipient is having, the recipient can use it for the time he wants. Like for 3 days, if I've given it to him, if he wants to run it for 10 hours, 12 hours, where he wants to take it is completely upon him. The fuel costs I'm not recovering. I'm only recovering on per day basis, per month basis, as the case may be. In such cases, if it is on time basis, the rate of GST will be 18%. Mind you, if I'm giving this goods carriage to a goods transport agency, if I'm giving it to a GTA, this amount is still exempted. It's not taxable. If I'm giving it to other than GTA, then only it becomes taxable. Next, transport of goods and passengers by ropeway is now taxable at the rate of 5%. So if I'm giving my transportation of goods or passengers and it is by ropeway, it will be taxable at the rate of 5%, and ITC should not have been taken on this. The condition is that the ITC should not have been taken on this, right? Exemption has been withdrawn for a few category of services, for GTA related services, where consideration for the transportation of goods on a consignment transported in a single carriage does not exceed 1,500 rupees. We know that wherever the transportation was less than 1,500 rupees and I had borrowed one carriage, in that case it was exempted. Also for a single consignee, if I am the GTA is charging less than 750 rupees, this was exempted. Now they have removed this exemption. It is no longer required according to them. Now everything which is provided by a GTA, irrespective of the amount, would be considered as taxable. Next, we come to renting of property. This is extremely important. As of now, it has been said, renting of residential property to any use to any registered person. So if I'm making any renting of property to any registered person, in that case, it would be taxable under RCM at the rate of 18%, right? It would be taxable under RCM at the rate of 18%. This is a change. Till now, this was exempt. Any residential property for residential use given to any person was exempt. Now it has been said, if it is given to a registered person, it may be for any use. If any residential property is there, it is given for any use, it would be taxable under RCM. If it is given for residential use to unregistered person, in that case, it would be considered as exempt. In any residential property given to any unregistered person, it would be considered as exempt. Still, this is continuing. But if it is not for residential use and it is to an unregistered person, so if the residential property is there, but it is given to an unregistered person not for residential use, it is taxable at forward charge at the rate of 18%. This provision was still there, it still continues. If any renting of property is for commercial purpose, I'm giving it to a commercial person for any use, commercial property, in that case it is 18%, irrespective of anything else. Commercial property is at the rate of 18%. Having said this, in all cases, the threshold of 20 lakhs would be applicable if we are taxing under forward charge. For RCM, the taxability is mandatory irrespective of the turnover. So the registered person is required to pay taxes irrespective of whether his turnover is breaching the threshold limit or not. So in every case, the tax would be applicable. Now, a lot of cases we are having this confusion that residential property, let's say taken by a chartered accountant. A chartered accountant is practicing in his own individual name. Now he's taking any residential property for his personal use, whether that would be taxable. To my mind, his registration is for his business purpose. If he is doing it for his personal purpose, we have to see the supply from the point of view of the supplier. The supplier who is giving it to the chartered accountant, he is giving it for his own residence. In that case, it is not required to be taxed in my view. It is still exempt. Only when it is given to, let's say, an employee of the chartered accountant for any use. In that case, the chartered accountant is bearing the fees for that. In that case, it would be considered as taxable under RCM, right? So it is for business purpose or for personal purpose. If it is given to an employee, it is obviously for business purpose. If it is for personal purpose, it would not be taxable in my humble view. I think we have a lot of questions in the chat box. Should we take up those questions now? Because now we are all going into the area of rate changes, because rate changes, I believe, it requires a separate discussion completely. And rate changes, I think a lot of people may not be interested because we know the rate of what products have changed to what, right? So what I'll do is I'll only cover a couple of slides, which is clarification with regard to rate changes. Lot of cases, electrically operated vehicles. Electrically operated vehicles have GST rate of 5%. Whereas if it is without battery, department used to consider it as chassis. And they used to say that electrically operated vehicles, if there is no battery fitted in it, we'll assume that this is chassis merely and we'll tax it at 28%. Now it has been clarified, electrically operated vehicles, even without battery, is taxable at the rate of 5%. Next, fly ash bricks. We had this huge dispute under fly ash bricks that if more than 90% fly ash content is there, then only the reduced rate would be applicable. Otherwise, the higher rate would be applicable. Also, the question was whether this 90% content is applicable for fly ash aggregate or is it applicable for fly ash bricks also. Department used to say it is applicable for fly ash bricks also. Whereas if you ask these persons who are manufacturing these fly ash bricks, they would say in no case we can have fly ash content of more than 90% for fly ash bricks. So this dispute was there. Now it has been stated very clearly. Fly ash bricks would be reduced, taxed at the reduced rate of 12%, irrespective of the fly ash content. Fly ash content is immaterial, right? Stones of minor polish and ready to use. If any concessional rate of 5% is applicable on monumental or building stone, which are mirror polished for ready to use. So they were saying if any monumental or building stone is there, right, which are not mirror polished, the concessional rate would still be 5%, which would be applicable. However, certain stones have mirror polish applied on them, which makes them ready to use, right? So there was an area of dispute regarding the classification of such stones, which has minor polish, which does not have mirror polish, but still it is ready to use. So they are saying even such minor polish stones would still attract rate of 5%. It would not be considered as mirror polished. Mirror polished stones have higher rate, non-mirror polished stones have lower rate. So they are saying merely if there is minor polish, which is not making it mirror polished, in that case, it would be taxable at the rate of 5%. I think with this, we have covered most of the amendments which have come in. Only the rate related changes as to what product has become what rate, I have excluded that part because that is an extensive, that is something that we all know based on the industry itself. With this, we come to the end of my side of the discussion. Thank you so much for a patient hearing. I'll take up the questions which are there in the chat box with the permission of the organizers.
Yeah, definitely, Shubham, please.
Yes.
Like, you want me to go through the chat box or like you are going through it?
That's okay. I'll go through it. No issues. Please let me know if I miss out on anything. If you can let me know that, that would be fine. I'll just take them up right from the beginning. Okay. GST on rent. If the landlord has rented out commercial property to tenant, then the landlord need not register as GST is not applicable. So if the landlord has rented out commercial property and that property is less than 20 lakh rupees, then registration is not required. If it is more than 20 lakh rupees, in that case, yes, the landlord needs to register and GST at the rate of 18% needs to be charged. In case erroneous ITC, which was wrongly availed and utilized, whether interest calculation would get excluded from time period of 20th March to 20th February 22. Unfortunately, no, sir. This is only for application of refund, and erroneous refund also only the time limit for making this erroneous refund assessment gets excluded. The interest time period does not get excluded, right? What will be the GST impact on loading, unloading, and transport of agricultural produce? For example, rice of 20 kg packet. So to my mind, if anything is falling within agricultural produce, right? If you, again, rice is something that you have to see whether it falls within agricultural produce. Paddy can fall within agricultural produce. Rice of 20 kg packet is basically pre-packaged product. Whether it falls within agricultural produce, I have my own doubts. If it is not falling within agricultural produce, it will be considered as taxable, right?
To support your thoughts, there has been a circular issued in pre-GST regime in service tax regarding this. The paddy is an agricultural produce, but rice is not.
Correct. For GST on rent query, we have to see rental income as 20 lakhs. Yes, you have to see 20 lakh rupees. We are talking about forward charge. In case of forward charge, you see 20 lakh limit. In case of other than forward charge, in case of RCM, there is no limit. If the recipient is registered, he needs to pay taxes. Okay, I think Jay also is asking one question.
Yeah.
Suppose ITC available against July 18, 2 invoices each. Okay, 100 has been availed and utilized. Electronic credit balance is reflecting 0. Okay, but by mistake, an invoice with respect to food and beverage dated July 18 has been availed in October, has been availed in October 18. Being availed, an ineligible ITC availed in October, can department contest the same has been availed in July 18 and charge 18 from July 18? Jay, can you please repeat the query?
Like, suppose there has been 3 invoices per 100 each, 2 pertaining to legitimate credits and 1 ineligible credits dated July 18. But
Okay.
2 invoices were availed and utilized till October 2018. The electronic credit ledger is showing as 0 balance. Now in October 18, that 100 rupees, the another invoice has been availed and utilized.
Okay.
So can the department say that the ineligible credit has been availed in the month of July and charge interest from the month of July, since all the 3 were dated July 18?
Okay, so July 18 invoice, credit taken in October 18,
yes,
right?
yes. And utilized in the same month of October 18.
So in my view, it should be October 18 because
Yes.
Whenever we take the invoice, avail the invoice, that is when we can utilize the credit. So availed and utilized has to be seen from October 18 and not from July 18, because simply because the invoice date is July 18, I had not even availed the credit. So how could I utilize that credit in July 18? So even if the balance was zero. Yeah.
Checking on the fact of the same amount, the department is saying no, you have availed the ineligible ITC in the same month, the earlier month. That's
No, absolutely not.
Yeah.
Absolutely not. We had not availed the ITC, so how could we utilize that ITC? RCM on rent is applicable in commercial property? No, sir. RCM on commercial property is not applicable. It is only on residential property. On commercial property, still 20 lakhs limit has to be seen. Still, forward charge would be applicable based on that. For ITC, wrongly availed but not utilized, balance in ECL is to be seen headwise or in totality. It has to be seen headwise, sir, in my view. It cannot be seen in totality. You have to look at the each head balance, whether you have sufficient balance in that head. Refund not received for with payment of IGST for 1819 in GST portal. IceGate portal not solving the problem because at the time of filing GSTR1 and in amendment there is mistake. SB005 errors shown. So what any solution? You can try to get the shipping bill amended now by furnishing the concordance table and see if this can be resolved from that by going to the custom authorities. GSTR1 cannot be changed. Only option is that, and see if this can be resolved from there, sir.
Shubham, I have a few points if we can have a discussion on it. A few
Sure.
minutes. Like
Sure.
income tax, the new section has been introduced, 194R. I guess
Right.
every one of us are aware about it. Like
Right.
any gifts provided to our distributors or any of the persons above 20,000 is taxable in 194R and is liable to get subjected to TDS now, right? So there is a like correlation between this 194R and section 17.5 block credit of the gift clause. Your views on that?
See, we have always said this. For example, I am the manufacturer, you're the distributor. I have, let's say, given some kind of TV, fridge, or whatever it is to you as a perquisite or a gift. Rather, I would say perquisite, not a gift. So I have given some amount to you. And what will now happen is I will deduct your TDS. It comes to your books of accounts, or it will comes to your 26AS. So now, whether you need to show it as an income under Income Tax Act is something which I feel maybe something which we'll have to see. So as of now, anything which comes into 26AS, if there is any income, you have to show it. Usually, even you show it as an incentive which has been provided by me. And when I show it, you show it as an incentive provided by you to me. In that case, you will charge me taxes on that.
Yes.
Right? For that, I believe ITC is available. I have no issues on that because that is an incentive. But when I had bought that product, when I had bought that fridge or TV, whether it falls under 17.5 is something that we have to see whether it is a gift or free sample. To my mind, it is not a gift or free sample if I'm giving it out of a contractual obligation. Because I have said if you achieve this much of turnover, you get this. Gift or free sample is something which is given outside of contractual obligation, outside of any consideration which is provided as per the contract, right? So in my view, ITC would be eligible, but when I give this gift to you, it will be a supply without consideration, to my mind. It will be a supply. I take the ITC, I give it to you. It is a supply without consideration. You take the ITC. Thereafter, when you give me this amount, it is an incentive. I take the ITC on that.
Correct.
That is how the entire transaction, according to me, pans out.
Thanks for sharing your views on it. One more query was regarding this hoardings which are being like displayed on the residential properties. License fee is being collected by the residential property holders from the commercial advertisers. Is RCM applicable on the same?
See, to my mind, it is clear case of sponsorship. If it is a commercial entity who is sponsoring this, it is supposed to be under RCM.
Yes. Participants, any further questions with the we can still have a talk with Shubham for 5 more minutes in case there is one.
Yes, Mr. Raghav Tibrewal, you want to ask your question by unmuting yourself, sir? chat. Okay, please. We have one more query which I think I'd left out. Rental income is say 4 lakh rupees per annum, but total income of landlord is say 1 crore. Then no need to register. Mind you, sir, if you have a total income of 1 crore, that means assuming a supply is of more than 20 lakhs, if your rental income is 4 lakhs, in that case, you have to collect GST. You will have to look at your aggregate turnover. You cannot look at the individual turnover only, right, of rental income. You have to look at your aggregate turnover. And after looking at the aggregate turnover, if any 1 rupee of turnover is taxable turnover and it breaches the threshold limit, you have to pay taxes on that, right? Okay, Mr. Tibrewal is writing, one of my client is an educational institute registered under Society Act. It has paid transportation charges around 50K to a GTA. Will it need to get registered under GST for this? So to my mind, with regard to this, if GTA is providing services to an unregistered person, there is an exemption as per GST law, which is specifically provided. So if you are talking about this case, according to me, it is an exempt supply, right? So there would not be requirement of registration for this. So there is no concept of RCM in this case. It is simply an exempt supply.
So Shubham, with this, like, I would like to thank you for the questions coming up. Would you like to take up?
Yeah. So basically, they have told society factories, yes, they have told it, but that is under the RCM notification. First, you look at the exemption notification. Under the exemption notification, if anything is not exempt, then you look at the RCM notification for taxability. This particular entry, GTA to unregistered person, is exempt. So if it is exempt, there is no question of RCM. If it is taxable, then we come to the question whether it is under RCM or forward charge.
Thank you, Shubham. I guess I'm sorry to interrupt. You can, please.
Yeah, last question. I think if a proprietor takes a residential property on rent, whether RCM applicable, as I said, if it is for non-business proposition, if it is for his personal purpose, to my mind, RCM should not be applicable in such a scenario.
Thank you, Shubham. I guess this question answer round will get carried on if we are going on with the session. But awesome deliberation. Thanks to you for putting up your insights on such minutely discussing every clause by clause on the 47th Amendment Council meeting and everything. Thanks a ton. Thank you.
Thank you so much for giving me a very patient hearing, and thank you, Jay, for being such a very kind host. Thank you to everyone for having to bear with me. Thank you.
Thanks. Bye-bye.
Bye.